The Federal Reserve is expected to raise interest rates today to mitigate climbing inflation. Officials will likely focus on an interest rate increase of a quarter percentage point, laying the groundwork for additional hikes. This action would come after the U.S. Labor Department reported inflation rose by 7.9% in February. That's the highest level in 40 years.
A recent CNBC survey reveals forecasters believe there is a 33% chance of a recession in the U.S. as prices continue to rise and uncertainty looms over the war in Ukraine. This is up 10 percentage points from a survey released just last month. Joining us now for more is Joe Glauber. He is a senior research fellow for the International Food Policy Research Institute. Joe, thank you for being here. The move to raise interest rates is expected, obviously, to tame inflation. But there are some economists who worry that the additional burden of higher rates could choke off growth entirely. Tell us, what's your perspective?
Well, I think, insofar as agriculture is concerned, certainly a lot of farmers hold loans. They'll be paying higher costs of that. It tends to have a bit of a dampening impact on things like land values. But we're coming at a time when we have very, very high food inflation, very high commodity prices, and land values have been increasing very, very double-digit growth over the last year.
You talk about food inflation. What impact could these interest rates have on the price of food, and how could U.S. officials potentially moderate those impacts?
Well, I think the interest rates probably have less direct impact on food. What's really going on right now is we have very tight markets. And then on top of that, we have this crisis in Ukraine, which Ukraine's a very major exporter, and have them out of the market means commodity prices like wheat and corn and soybeans and animal products of meats and poultry are all going up. And that's consumers are seeing that at the grocery store. Again, very little interest rates can do about that. But I think we're going to see high food inflation for a number of months to come.
Joe, you bring up a really important point about how American consumers are really being hurt when they go to the grocery store. Food insecurity is already a problem across the nation, and inflation is making this so much worse. So what can U.S. officials do to respond to this growing crisis?
Yeah, I think, I remember that U.S. consumers pay less than a lot of countries do for their food in terms of what the share of food expenditures are relative to the overall income. But poor families pay a much higher percentage of their incomes on food. And I think they're the ones who are probably most hurt by this. The rest of us may be switching from higher cuts of meat to lower price cuts of meat, making those sorts of decisions. But for poor families, it's tough. And so in the past, there's been things like the SNAP program, which have helped low-income families still be able to purchase food. And I think those are the sorts of responses in the short term that are, those programs are targeted do have inflation kickers, but I think we have to be mindful that inflation has been really high and that those benefits should be adjusted.
Thank you so much for your insight, Joe Glauber.
Mm-hmm.